Good morning, everybody. Good morning. What is today? Thursday? Happy Thursday, guys. Daniel, CJ, nice to see you. Oh, how's everybody doing today? It's still 8:59 in the morning. We have a second, right? Stretch your arms, take a deep breath, take that last swig of coffee. We're going to do some learning today, guys. I'm excited about the day. I've been up for a while, snapping pictures, getting ready for some lessons today. Um, We've done a lot of bouncing around this week. We've done a lot of looking at the live market. Hey, good morning, Safia. No such thing as a last swig. I have to, Ron, or I am hopped up for this classroom and I can't focus. So I have to limit myself to 2 cups in the morning. Good morning, Ziba. Great to see you. Um, Been doing a lot of thinking. We're doing a lot of stuff with looking at rules and talking about rules, going back and forth through the live market, looking a lot at what you guys are doing. Guys, I'm going to pump the brakes a little bit today, and we're going to go back to maybe a little, maybe a little 101 class. Let's talk about what we're looking at. Let's look at it in a little bit of detail. And I want you guys, especially my new guys, you ready? Here comes our moment of bravery. Who's new in my classroom? And when I say new, who's in their first, I don't know, 20, 30 years of trading? Because you're never going to stop learning, right? CJ, you're very new here. It's great to have you. Guys, I'm new. I've been doing this for years. I'm still learning every day. I absolutely refuse to stop learning, to try to do a little bit more each and every day, to become a little bit better each and every day. I still have this fantasy. We're all going to buy an island one day. There's going to be pina coladas, maybe a golf course on it. It's going to be a good time. But we got to build a foundation. We got to let yourself be new. I was having a wonderful conversation with someone via email, and it reminded me it was a couple months ago, and my wife decided that she was going to trade. She had taken a month off of work, and she's like, you know what? I'm going to learn these indicators. I'm going to learn to do this. And let me give you a little backstory on my wife. She has been in a surgical setting for the last 25 years. She has worked with heart surgeons and trauma surgeons that have procedures that have instruments named after them. Her resume is like the who's who in the cardiothoracic trauma world. And she's good at what she does. Brilliant. She runs operating rooms. She's been director of surgery. I'm bragging a little bit on my wife right now. And she said, I'm going to learn these indicators and I'm going to learn to trade. And guys, I kid you not, her time frame is she said I should be good at this in about a week. Because she's used to being the one with all the answers. She's like, I'm going to be great at this. I'm going to come in. And guys, we're about 2 weeks in. And she was a lot further than she was. She's very accomplished, CJ. I'm very proud of my wife. And true story, and this made me laugh. She goes, you know what? She goes, I'm going to go back to the hospital and save a life so I can feel smart again. She forgot that she wasn't the person in charge on her journey. She wasn't the teacher. She wasn't the educator. She wasn't the one with all the answers. She had to change her role and become the person with all the questions. And guys, that's a tough switch sometimes. It really is. So I want you to do me a favor. All that to say, I want you to be new. I want you to be brand new, and I want you to realize that this is a journey, and I really want you to, she's got horrible judgment in men, Safia, but beyond that, she's great. I want you to give yourself a little bit of permission to be brand new, because where you'll be 30 days from now is absolutely nowhere close to where you are today. So enjoy the journey. Maybe take advantage of being new for a little bit. Ask every silly question. There are no silly questions except the ones that aren't asked. But ask every question that you have. Post every picture that you want to share. Guys, create conversations. Ron. Oh, she was still in charge. She just wasn't the master yet. Light this room up with your pictures and your questions because it really is an amazing journey. And it's a lot of fun. And we're all new at some point. And guys, there's people in this room from all walks of life. Before we do anything, let's talk news, right? Let's make sure that we're not jumping in front of that freight train, that we are making sure that we are aware 100% when the potential for news is coming out. We had some 8:30 a.m. core PPI, PPI. I guess they like M&Ms. I don't know. I'm not concerned about what the news is. What I'm concerned about is that red box, is that orange box, letting me know that there may be some emotion coming into that market, that it may move, that it may jump, that I might get slipped even in the perfect trade. So I typically am not even in front of my computer when news happens. That's when I go cook some egg whites and oatmeal and get my day going the right direction. So each and every morning, we're checking news. And then, guys, we told you it was coming, and it happened, right? Crude oil roll date today. We're going from the 323 to the 423. I put an announcement in the room that I was going to do that. And why was I doing that? Let me pull it up and show you. I've been busy this morning. Look at all those pictures I've taken for you guys. Because that March contract is almost half the volume of the April. So guys, every month crude's going to roll. Every month it's going to happen. We need to make sure that we're on the right side of things, that we're trading with the crew, right? The big groups of people where the volume is, where it's easy to get in, where it's easy to get out. The volume is there. And it's a really simple way to do it. Guys, who needs help rolling contracts on NinjaTrader 7? NinjaTrader 8. Yep, Elvis, she had to break a few before me too. I know a lot of men find this surprising, but their wives probably had a boyfriend before them. Guys, we are going to roll contracts real quick. At some point during the day, somebody is going to say to me, hey, Mark, our fibs don't line up. Hey, Mark, I'm trading at a weird price. Why isn't the market moving? Well, it's because the volume has changed. And here's your instructions on how to, right? I'm going to give you a fish, but I'm going to teach you to fish. Really simple process. I want you to go Tools and Instrument Manager. From Instrument Manager, you're going to type in CL. That's the crude contract symbol. Where did my NinjaTrader go? Get back up there. There we go. I'm going to type in CL. And watch this. When I click search, it's going to show me crude, and it's going to give me the correct expiration date. And all I need to do is hit this little arrow to the left, boom, one time, and crude is up into my instrument list. We're done there. Close it out. And then I'm going to come to my crude oil chart. Two ways to do this. Guys, this is the easiest way, in my opinion. Is up in the upper right, there's an L button. This is your linked button. If you link every chart the same color, absolutely, CJ, I'll be happy to. Then all I have to do is go to my drop-down menu, and I can click crude 24 or 423, and then it's going to update all of my charts. So CJ, if you're going to do it manually, and I think it's cool to learn this manually, Tools, Instrument Manager, and you're going to type in CL. You could have changed it yesterday. D, I always check the volume. That's my standard on what I'm doing. So once you click search, CJ, you can highlight it and pop it right over to that list. Once it's in the list, just use your drop-down menu and change it up top. You guys want the easier way to do it? That's the I'm old and stuck in my ways way. I can go to the resources page and I can just run my installers for NinjaTrader 7. John Novak comes through. Same with MCL Whalen, absolutely. John Novak will rebuild the installers when contracts roll. So if you want to, you can just download the installer and it'll give you workspaces with the most current contract. That's the easy way, but that's no fun, right? So learn how to do it manually. just in case John gets hit by a bus one day. Not wishing that on him. But this will walk you through the process as well. CJ, D, all you guys, he leaves no stone unturned. Really, if there's a question, chances are the answers are going to be there for you. And that's in the user guide. This is all your good stuff about NinjaTrader. And then we've got the tutorial section, guys, straight off the education page. It sure is, Safia, but the mini S&P rolls every 3 months. It's quarterly rather than monthly. So we're still a little bit out on the S&P. But don't worry, guys. We've never run a class when the contracts have rolled and not told you guys or not installed the updates. We'll take good care of you, I promise. So from the tutorial section, guys, everything that I talk about comes from this area. Each and every subject that we discuss is going to come from this area. And this is where I'm going to kind of piggyback on that plea to allow yourself to be new. Guys, for 30 days, let's focus on consistent winning trades. For 30 days, focus on the best of the best. Focus on the highest probability trend trades that we have. Jonathan, impeccable timing. Focus on the trade that gives you the advantage of momentum, that gives you the advantage of a clear path, and focus on a trade that gives you the advantage of entering the market where it's most likely to continue. Jonathan and I rehearsed that earlier this morning. That trade that Jonathan just posted in the room is exactly what we're going to talk about. We're going to talk about, for your first 30 days, finding entries on a high probability trend trade. Because a high probability trend trade means that all the indicators on every chart are going to agree with the rules for the trade. And typically this is when the triggers are their strongest. No termination conditions exist, and there's no trouble spots between your entry and your target. High probability trade is going to give you the most valuable skill that you can have. You're going to become a chart reader. I want you to write that down on a piece of paper. I'm going to be a chart reader, not a day trader, for my first 30 days. I'm going to be able to look at my charts, and I'm going to understand where the market is likely to continue. And we're going to use that continuation point to find entries for a high probability trend trade. And once again, I want you guys to look at Jonathan's chart. How did Jonathan know to put an entry right at a green line inside of favorable large triggers? Look at his entry, guys, almost to the tick. Jonathan understands where the market is likely to continue when it's in an uptrend. He also understands where it's likely to go. One of the other skills you're going to learn. Look at his exit. 2 ticks before Fibonacci resistance. We're going to talk about this today. And then you're going to understand where the market is likely to stop. And these likely to stop areas are what we call termination conditions. It's an area where the market has the potential to reverse. So guys, 30 days, focus on entries, high probability trend trades. Teach yourself to read your indicators. Teach yourself to look at your charts, to recognize these concepts. Because once you're able to read your indicators, once you become a master of chart reading, then it's going to open the door for you guys. Everybody likes to be busy. Everybody wants to take everything that they see. Well, the market doesn't give statistical advantages all the time. But with a little bit of chart reading, you can take what's called a medium probability trade when most of your indicators line up for the trade. However, a small issue exists. Your ability to read your charts will help you identify that small issue. When executing medium probability trades, you're going to take these trades and manage them assertively. Your ability to read your charts is going to allow you to manage them assertively. You're going to recognize change before change really happens. And then finally, if there's trouble in your way, your chart reading will have you recognizing it. You can take quick profits, get to a zero loss. But this is going to be the vast majority of your trades, guys. Medium probability trades will probably be most of what you do, but take 30 days to learn how to read your charts. Take 30 days so that you can understand where the market is likely to continue, where the market is likely to go, and where it's likely to stop. And it's going to open that door for you to the medium probability trades because of your ability to read charts. So do me a favor, give me a Y in the room if you're with me. Let's commit, guys. If you're brand new, day 1, day 3, day 5, 30 days of learning to read your indicators, and it's going to open up every door you've ever hoped to have open. It's going to be amazing. So let's focus. Whoops, that's the wrong picture, isn't it? Guys, 3 simple rules. Okay? 3 simple rules. The large chart, 13.2. Day 5, I love it, D. There's no reason not to. Guys, you know what my favorite email that I ever got from somebody is? I had a gentleman send me an email that said, you know what? When I was learning these indicators, I realized that I wasn't trying to become a better trader. I was trying to prove you wrong. Literally did everything he could to prove me wrong. He's a client now. I encourage you. Try and convince yourself that I'm full of crap. Do the study, do the work. You'll be with us for life, guys. 3 simple rules. 2 charts. Keeping it simple, right? Allowing it to be easy, only focusing on entries. Your largest chart is your 13.2. 13.2 is going to use the most current bar, guys. 1 bar on the 13.2, and you're going to be able to create determinations that give you all sorts of advantages. The overall trend of the market. If the background is green on your 13.2, we're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background on your 13.2 is red, we're in a downtrend. You should only be looking for rules to be met for high probability trend trades short. Keep yourself on the right side of the market. We've all heard the cliche, the trend is your friend. And then rules 1 and 2 of 3 are going to be met on that 13.2. You're going to be able to identify strong triggers. You're going to make sure that we're not trading in determination conditions. And you're going to use that 13.2 as a broad stroke of a brush, guys. It's going to give you the general temperature of the market. What direction is the market going? Is it going that way fast? And is there anything in the way? And when this gives you rules met, we're going to go to a smaller, faster chart. Guys, do me a favor. Give me a Y in the room if you can hear me. Gary doesn't believe me. Gary, you got me yet? Cool. Thanks, y'all. Sometimes you're going to come in, and it might be on your end, guys. Log out, log in, double check, make sure you're cool. When your rules are met on the 13.2, and only when they're met on the 13.2, going to go to the 5-1 chart, and this is going to be your entry chart. That's it. You're going to refine the broad stroke of the brush provided by the 13.2, and you're going to pinpoint your entry where the market is likely to continue. Once again, that chart reading. This is where rule number 3 happens, and rule number 3 gets you those amazing entries, just like Jonathan got, and it's going to allow you to reduce risk and maximize your profit potential. So, 2 charts. Everybody's okay with that, right? 3 rules. On the large chart, have to have strong triggers. No termination conditions should be in your way, guys. Very important. In entry, we're going to use a limit order at the areas because we're going to know before it gets there where it's most likely to continue. So here is your formula for you math people. A trade, your trade, the high probability trend trade, is momentum plus a clear path plus an entry area. And these are the advantages here in bright yellow that each rule provides. Strong triggers gives me the advantage of momentum. Termination conditions not present give me the advantage of a clear path. And by using a limit order to buy or sell a pullback at an area, it gives me the advantage of an entry area where the market is likely to continue. Is everybody okay with 3 rules and 2 charts? Gonna keep it simple, guys. All right. If you want difficult, let's go to YouTube. Find like an extra, I don't know, like a calculus class or something. Rule number 1 says strong triggers. I'm going to give it to you right here. Strong triggers in an uptrend. When your background is green, those small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. And guys, read this. The odds are favorable for the market to continue up. The advantage of momentum, of an odds favorable momentum, when you have a strong trigger look. In a downtrend, small triggers below the large are wide, they're angled in the direction of the trend. Once again, I love the language, odds favorable for the market to continue down. Guys, rule number one gives you the advantage of odds favorable momentum. And if you commit to this rule, if you commit to this look, you've given yourself that first advantage looking for a high probability trend trade. Because when we begin to lose that look, when those small triggers work their way back inside of the large triggers, look at the words once again. Anything can happen up or down. This is a weakening of the large triggers. One is odds favorable, one is anything can happen. When you forfeit odds favorable momentum, you forfeit the advantage of momentum. Pretty simple, right? Look at the live market. Small triggers below the large triggers. Large triggers are wide, they're angled down. Give me a Y in the room if you see it. That's odds favorable momentum on the 13-2 chart. Small triggers above the large triggers are wide, they're angled in the direction of the trend. Guys, you may not remember this, but Jonathan was nice enough to show us the picture perfect entry right there. That market was likely to continue in the direction of the trend, and I'll be darned, it sure enough did. This is the advantage of momentum. There's another one right behind us. Do you see how I'm circling these tails? These tails are potential entries, and we're going to talk about them. But what we're doing, guys, is we're recognizing that advantage of momentum on the 13-2. Pretty simple. And this is the one that people get day one. They're like, I got this momentum stuff, no worries. Take this picture. Put it into your spreadsheet. Duct tape it to your wall. Don't forget that look. Rule number two, if I go to my big simple rules, I'll put this in the room for you too. I'm going to share a lot today, guys. Rule number two says termination false. No termination conditions. Not trading into an area likely to stop the market. Remember, chart reading. So what are the areas? The areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence low line, magenta divergence high line. Any third divergence in the same area, guys, this is going to be one that you see on the 5-1 chart, on a smaller, faster chart before you ever see it on the 13-2. We'll talk about it. And then a large sharp midband if the large triggers are a full bar away. I made a picture for you guys too. For those of you that are brand new, here's a picture of your areas. Any one of these areas can potentially be a termination condition. So it's a simple recipe to figure out whether or not it's likely to stop the market. We're going to start with picture number one, because one always seems like a great place to start, right? Two things have to happen. The first thing is price reaches an area. What does that mean? That means that the price bars, those red bars, trend down. They're going down, price is dropping, and they run smack dab headfirst into an area of support. When price reaches this Fibonacci support, your next job, step number two, is to ask yourself, where are the trigger lines? If none of the trigger lines are below support, guys, you have a termination condition. Rule number two is not met. You've reached an area likely to stop the market. This becomes a great place to potentially take profits, but it's also a giant red flag that says you no longer have the advantage of a clear path. Give me a Y in the room if you're with me. Two-part process. Price reaches the area. If price reaches the area and absolutely none of those trigger lines break through, hit the brakes. You've lost the advantage of a clear path. Doesn't it feel good to have advantages though? The advantage of momentum, and then to couple that with the advantage of a clear path. Well, when is my path clear? When my small triggers and my large triggers break below this area of support, guys, I consider the area broken. Support begins to act as resistance. I have the advantage of a clear path. No triggers through, no trade. Both triggers through, take the trade. Everybody comfortable with that? It's really pretty easy, but you have to study it. You have to burn it into your mind. You've got to go through and you've got to start looking for these termination conditions. Absolutely, Safia. Price reaches support. How many of your trigger lines have made it below that area of support? Absolutely none, right? So this is a termination condition. This is an area likely to stop the market. Here, price reaches support, right? Up top, none of my trigger lines have broken through yet. We're not going short into this area. But when both the small and the large, whoops, getting click happy, get below this area of support, it begins to act as resistance. We consider this area broken. We now have the advantage of a clear path once again. So let's look at the live market real quick and let's see. We'll use this one. This is picture perfect. Price reaches support, right? How many trigger lines went through this area of support? Do you guys see it? Absolutely none. So we have a termination condition, and no matter what you feel in your heart that market should do, we've reached an area that may reverse the market. And guys, sure enough, it did. And this termination condition created a full reversal of the market. And that full reversal of the market gave us that odds favorable momentum. And that odds favorable momentum sent those trigger lines smashing through the area and created an opportunity to take a trade. Up top once again, price reached this area of resistance. How many trigger lines broke through that area? Guys, what we're doing right now is teaching you to study. How do I study termination conditions? Price reaches an area. None of the trigger lines get above. This becomes an area likely to stop the market. Sure enough, it does. I get a full reversal. That full reversal gives me odds favorable momentum. And there's another potential entry. And these termination conditions repeat themselves over and over and over. Price breaks resistance, pulls back, and uses it as support. Price breaks support. Do you see it? All the triggers get below, and now it uses it as resistance. Absolutely. So no trigger line. So odds favorable momentum, Safia? Great question. Odds favorable momentum is rule number one. So your termination conditions have nothing to do with the strength of the market. Your termination conditions have only to do with the position of the trigger lines in relationship to the area. So support is reached, trigger lines don't break, we're in a termination condition. Ron says crude oil is showing us something right now. Price reaches support. Do you guys see it? Those trigger lines didn't break through, did they? Here's an area of support. Only one line of my small triggers got through. Guys, this is a termination condition. This is an area likely to stop the market based on a comparison of the area and the trigger lines. So now there's only two options, right? The market can either reverse and go the other direction, or the area can break. And guys, areas break all the time, typically with odds favorable momentum. Do you see it? Strong triggers break things, but you want to let those small get to the other side at least, guys. And that's going to take us into the next look. No triggers through, no trade. Area is likely to stop the market. All triggers through, the area is broken. Guys, remember we said that your chart reading is going to take you to medium probability trades? So Safia, this is the one. And I'm going to just block this all out. When the small triggers go through, the large do not. This is called a 50-50. It's not anything to do with your chances of success on a trade. You could call this a straddle look. The smalls are one side, the large are the other. A one below, one above look. I call it whatever you want, but the understanding is that the small triggers have broken through and the large triggers have not. And guys, here's the kicker on this one. With odds favorable momentum. Do you see it? Super strong triggers. The smalls are through, the large are not. This is an area. This is an area with the potential to break, but it has not broken. Absolutely. So I'm talking about making it through Fibonacci support. Smalls go through to the other side of Fibonacci support. The large do not. It's a 50-50 look. It has the potential to break, but it hasn't broken. When the smalls break through and the large have broken through, then we consider the area broken. So if we look at the live market, the smalls have now broken through, but the large have not. This 78.80 range is an area with the potential to break, but it's an area that hasn't broken yet. Do you see it, Safia? When the small triggers broke above and the large triggers remain below, this becomes an area with the potential to break, but it hasn't broken yet. So if we're going to take a potential trade, we want to make sure that we have odds favorable momentum going into that area because, guys, strong triggers break things. Pretty cool, right? We can gauge the momentum and we can use that momentum to help us make a decision on whether or not we're willing to take a trade into a potentially broken area. All right, let's go back because there's a couple more great things on termination conditions that we can do here. Sometimes the market creates a pivot, right? The market, what is a pivot? The market comes down and the market goes up. That's all a pivot is. So on my 13.2, small triggers broke through support. Large triggers did not. Does everybody see this? And then the market goes back up. Guys, this is just a pivot. This isn't a termination condition. Because price didn't reach the area and then the market goes up. Triggers break through, not a termination condition. Hey, good morning, John Novak. It's when price pulls back and reaches that divergence low. Because remember when we talked about the list, right? Divergence low, divergence high. Price reaches a divergence low. None of the trigger lines break through. Now I have a termination condition. Now I have an area with the potential to stop the market. D, pivots don't have momentum, in my opinion. I don't worry about momentum. Oh, at the pivot. I thought you said of the pivot. My bad. I read that wrong. Well, the smalls are beginning to break through, right? Or the smalls are a little bit below, the large aren't, but they're still overlapped. It's not my best look, is it, D? It looks more like this, doesn't it? Kind of the tail end of momentum, kind of that meh area. It's not odds favorable. It's not odds favorable. There it is right there. There's that exact same look, isn't it? It's confusing. So watch this, D. You want to know how to never be confused? For 30 days, I love that you guys are asking these questions. For 30 days, I want you to do something. 30 days. From the point where the trigger lines break above and away until they return. That's your best of the best area, D. And what that's going to do for you, let me get back to, we'll go back to momentum. what that's going to do for you is it's going to keep you focused on the best of the best. It's going to keep you dialed into having that advantage of momentum. And it's going to keep you from having to figure out a bunch of stuff, excuse me, that you're not ready to figure out, if that makes sense. 30 days from now, D, you're going to make great decisions on this look, but it's not going to be based on this look alone. You're going to be able to look at your chart and say, well, I'm losing momentum, but my chart reading tells me that I have a clear path. My chart reading tells me that my smaller charts are strong. My chart reading tells me that I have a tiny little window of opportunity. This may become a trade for you later, right? Same thing in a downtrend. This is your best of the best. You'll start making decisions a little later and start picking up those medium probability trades because you're going to be able to look at your charts and understand whether or not there is an advantage. Safia, absolutely, D. And I know that it's tough. 30 days, right? That's it, 30 days. 30 days to really become comfortable with these looks. All right, Safia, is the area broken? And guys, just in case you didn't realize this is the absolute best use of your time and resources. Take a picture, ask a question. So Safia, I'm going to take a picture of your picture, and we're going to do it like this. All right. Make it nice and big. So Safia's small trigger lines are below this area, right? On this bar, the large triggers are above, the large triggers are above, the large triggers are above, the large triggers are above. It's on this bar that this area is considered completely broken. Does that make sense? It takes a minute, right? The smalls are going to get through long before the large. And sometimes you're going to have areas, one on top of the other. No problem. Let's do this. I love this because, guys, you make me think about better ways to teach. Let me put my indicators back on here, Safia, and we're going to do a bar by bar on when an area is broken. Sound good? All right, here we go. On the 13.2, let's get rid of all the noise. And we're looking at the right side of the screen. And this will be our area in question. Sound good? Is everybody with me on this? Just as though the market were live. Cool. So Safia, how many trigger lines are through the area? Smalls are above, large are above. So is this a termination condition still? Absolutely. No short trades. The market begins to move, right? It's pushing down. See how the small triggers are still not through the area? Once again, still a termination. Now they're beginning to break the area. But the small triggers haven't made it through. And this is what's going to get new users a little bit. They're going to say, well, they're almost through, Mark. Well, almost becomes a difficult way to manage. All right. So now the smalls are through, but the large have remained above. So now we have a 50-50. Guys, give me a Y in the room if you see it. Now I have a look where 50% of my trigger lines have made it through this area of support. 50% of my trigger lines have remained above. So right now, what does that mean for me? I'm going to type it in the room. It means that this area has the potential to break, but it is not considered broken yet. And remember, we're talking about high probability right now. It has the potential to break, but it's not broken yet. The market continues down. The large triggers get closer and closer and closer, and boom. Both large and smaller through the areas. It's on this point right here where this area is considered completely broken. And if I back up, the one above it is now broken. Both sets of triggers are below this area. Does that help a little bit, guys? Both sets are now below this area. And now this blue line, the smalls are through. I don't, D. Because I have to have rules met. And all we're talking about right now, D, is we're talking about when an area is broken, when it has the potential to break, and then back it up a little bit, when we are no longer taking trades into the area. So once again, support is reached. None of the trigger lines are through, guys. We're looking at a termination condition. Give me a Y if you're with me. We're talking about 78.96 here. Price reaches the area. Cool. Small triggers are through. It's an area with the potential to break based on odds favorable momentum, but hasn't broken yet. And I don't know if this one actually breaks. The large triggers come through. This area breaks, but this termination condition does not. And then notice that the triggers don't break the area. It creates a full reversal, and it's giving us odds favorable momentum to the other side. So Safi is saying, not a trend trade. D was asking, well, where would you get in? Well, guys, the smalls are through, right? The small triggers are through the area. I have odds favorable momentum. Is this an area that's broken or has the potential to break? What do you guys think? This one is still potential, D, because the large triggers are still above. Guys, I love termination condition lessons because you really start to realize where you need a little bit of clarity. And I needed this one. A little true story about me. I would trade into every termination condition I could find for about 3 months because I didn't take the time to ask questions like this. So thank you guys for doing this. Live market, price reaches resistance. How many trigger lines have broken through? 79.25. Not for long, Safia. Give me a Y in the room if you see it. Termination condition, right? Let's see if we can get a live market example. In the moment, it's a termination condition. Awesome. Guys, you're going to have aha moments every day for the next 5 years. I still have them. What has to happen to look for a long trade? The area has to break, right? So right now I know that I'm not taking a long trade into a termination condition, but I can't go short because the momentum is up, because the trend is up. Guys, 90% of what you do is going to be reading your indicators and waiting for an advantage. 10% of what you do, D, is going to be recognizing the advantage based on the indicators and then taking a shot at it if you get it. So I'm going to leave this one circled on an area with the potential to break. And when we come back and talk about entries, D, we're going to see if there was an opportunity in that move. Sound good, guys? I love it when the live market gives lessons. All right, so I'm going to go back. Everybody's good on momentum, right? Odds favorable momentum sets the tone. Why is odds favorable momentum not enough? Because sometimes when the small are below the large, when the large are wide, they're angled in the direction of the trend. Everything says the market's likely to continue. It runs smack dab into one of those areas that we talked about. In this case, it's the one-to-ones. So price reaches an area, what do we ask ourselves? Where are the trigger lines? All of the trigger lines remain above support. No short trades into that area, right? Rule number 2 is not met. Does everybody understand? No triggers through the area, no trade into that area, guys. We've given away the advantage of a clear path. And look what happens. It creates a full reversal. And then it gives us odds favorable momentum. And then it gives us all the triggers above the area. And there's one of those potential entries. It's just a little bit of patience. 90% of what we do is saying, don't go yet. Let it change, let it break, take the trade. Sometimes the market's going to twist right in the middle of nowhere. Have you guys seen this one? All trigger lines get below support, and you're thinking to yourself, heck yeah, this area is broken. The market's going down. I'm in a downtrend. Everything says go down. I've got nothing in the way. Don't have the advantage of momentum. We're going to talk about another termination condition. Remember we said 3 divergence in the same location may reverse the market? Where'd that picture go? Guys, when I have this look on my 13.2, or even when I have this look, when I see a pivot that comes from the middle of nowhere, and D, I know that you recognize this, there's odds favorable momentum at this. In the upward trend on this chart, charts haven't widened. How can you take a trade? It's okay. No stupid questions. Stop apologizing, please. Right here, Safia? Because the smalls are outside of the large, right? They're not inside. They're not anything can happen. They're riding the top of them. But they are most certainly not inside of the large. So we haven't weakened them yet. But because we've come from a termination condition, because we've gotten a full reversal, because the small are technically outside of the large, if this is a good look at entry, I'm not going to miss that entry. So over here, same thing, right? Market reverses, smalls above, large below, 50-50. That's a potential trade as well. Mark, those are small swing. Those are small swing 1-to-1s. I'll give you a picture real quick. Those are small swing. They happen to show up in this picture, Safia. These are 1-to-1s, yellow dots. Let me go back. And let's just double check our list. And this is why we do this, and this is why we always backtrack a little bit to double check our math. Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, divergence low, magenta high. Notice that purple dots didn't make the list, Safia. Take that trade. Pretty cool, right? It's right there, but our brains want to make it more complicated always. So sometimes the market turns from nowhere. Sometimes we get a pivot in what I like to call from space, not at a key area. You're going to see this on your small chart before you see it on the large chart, but guys, this is a termination that's true on any time frame. We're just going to use it initially to not enter trades, and then you're going to use it in medium probability trades to manage trades. 3 divergence in the same price range may terminate a trend. What is divergence? Divergence means when price pulls down and forms this pivot, goes from down to up, and a low, if this negative number prints, if the cyan divergence line, it lets me know that there was just a loss of momentum. Momentum didn't follow the market, didn't follow price. I see it happen a second time. I see it happen a third time. It may terminate the trend. So guys, 3 on its own is a termination condition. When the small trigger lines work their way inside of the large trigger lines, it becomes more powerful. We've gone from anything can happen or we've gone from odds favorable to anything can happen. This is a termination condition on its own. Let's have some fun. All right. This look, when the triggers return inside, makes it more powerful. And then finally, this look, when your third pivot from a low or your third pivot from a high is lower than the previous or higher than the previous, it adds even more fuel to it. So 3 divergences in the same price range may terminate the trend. 3 divergences in the same price range with weak triggers may terminate the trend. 3 divergences in the same location with a higher pivot from a low or a lower pivot from a high may terminate the trend. Guys, give me just 1 second. I've got the prettiest nurse ever behind me. I'm going to tell her to have a great day. Overlap a little bit. Yeah. On the lips, Ron. 26 years she's been putting up with me, so I figured I should say goodbye every now and then. Are you guys with me on this one? Small chart termination condition. The only termination condition on a small chart, 3 divergence in the same location. Cool. Dave, I see that you have a picture with a question. Let's answer it real quick. Do I enter long here? All rules met? If there's an entry on the 5-1, Dave, absolutely I do. Unless, you ready? Unless, dun, 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 I have 3 divergences in the same location. And Dave, this is a great segue because I know you have a little more experience. Guys, let's say, hypothetically, I enter the market right here at a mid-band. And everything is up on my 13.2. My 13.2 looks exactly like this. Does everybody recognize strong triggers? No termination conditions. We haven't reached the area. Rules 1 and 2 are met without question, right, Dave? And the rest of you guys, I hope you can see it. Can you hear me? Did I unmute? Yep. Okay, cool. So guys, hypothetically, I may enter a trade. If I get 3 divergences, it becomes a termination condition. I know to exit the trade. So how can I use 3 divergences as a management tool? If I enter right here and I get a second divergence, I'm aware. If I get a third divergence, I can exit. I can get out of that trade. So Dave B, absolutely. If I had that look on the 13.2 and this entry on the 5-1, I'm in that trade. And I'm going to read my indicators to help me manage it. Same thing going the other way. If I'm in a trade at this 1-to-1 and everything says down, my charts are fast, there's nothing in the way, these 3 divergences are going to give me the opportunity to manage assertively, to be able to get out of a trade without losing money. Does that make sense, guys? Use it to keep you out of a trade. Use it to get you out of a trade that the conditions are changing on. Remember, everything we do is chart reading. Everything we do is chart reading. And I want you to remember this too. It takes 2 to 4 years to be a nurse. It takes about 14 years to be a doctor. It's going to take you about 7 to become an engineer. Don't put the pressure on yourself to have the skill set to make $1 million a year as a day trader in the first week. Guys, it's all going to come together. And CJ, it will. And it's going to click a lot more. Right now, you're understanding the language. You're understanding how we teach. And it's just going to get better and better every day. There's those 3 divergences on a higher time frame, right? You can expect bigger moves after that look. All right, so far, we've talked about odds favorable. If the smalls break through an area, right? And here's a great example. Price reaches the area. How many trigger lines made it through that area of resistance? Absolutely none, right? We're in a holding pattern. And now the small triggers are through, the large triggers are not. We go from not broken to potential to break. And now if those large triggers swing to the upside, then we're going to get an area that is broken. So we have odds favorable momentum, right? We know that because of our 13-2 chart, we have the advantage of a market that's likely to continue in the direction of the trend. Because of our ability to recognize termination conditions, we understand that we now have the advantage of a clear path. Is everybody comfortable with these two concepts? Momentum, clear path. Let's make some magic happen, guys. Let's pinpoint where the market is likely to continue. And during the live market, when the rules are met on the 13-2 chart, in an uptrend, this is what your 5-1 is going to look like. Price bars will be green and racing to the upside. You're going to focus your attention on these 5-1 large triggers. Are they up? Are they strong? Are they trending one on top of the other, guys? That's your best look. These are strong large triggers, one on top of the other, angled to the upside like a shark about to breach. And all I'm doing right now is making the decision that it's time to look for an entry. And entries always come from areas. Always. It can be a mid-band. It can be a 1-to-1. It can be a fib. There you go, Safia. And you know that all of this is in the user manual, right? You can go through this each and every day. And I'm going to give you a much better picture on this one. Everything says up. All we're doing is making the decision that it's time to take a trade. Rule number 3 says that we are going to use a limit order, meaning that we're going to let the market come to us. And that we're going to use a limit order to buy or sell a pullback. And a pullback is just a small retracement in price. That small retracement in price counter to the underlying trend. That's the clinical definition. Remember, this is on our smaller, faster chart, right? What happens in 1 bar on the 13-2 might happen in 25 on the 5-1. Why are we doing that? Because on the 13-2, we get the mentality of the large crowd. The big charts define areas. The big charts define direction. We know that the large crowd says we're going up, and it's going up with all sorts of strength. Guys, we need those silly little stragglers on the sidelines to say, but I really want the market to go down. I need the market to go the other direction against all that momentum. I need the market to go down with nothing in the way of that freight train. And guys, thank goodness for these people. Because when they decide collectively that the market should go down, they're going to give us a pullback. At the time of this reversal bar, we're going to create a window of opportunity. And your window of opportunity is going to be from your highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. This is your window of opportunity. This is the area where the market is likely to continue. You're going to right-click at the top of that window, and you're going to wait and see. Either the market gets you or it doesn't. But if the market pulls back to the top of that window, 79.21, then you're now in a long trade. You have the advantage of momentum. You have the advantage of a clear path. And now you have the advantage of taking a trade where the market is likely to continue. Guys, the red box is from the top of the triggers to the bottom of the triggers. The teal box is from the highest point of support to the lowest point of support. The teal box represents your window of opportunity. Does that make sense? We're not trading from the large triggers. We're trading from the area inside of the large triggers because that's where the market is likely to continue. Give me a Y in the room if you're with me. Everything says up. Wait for a reversal bar. The reversal bar signals the start of the pullback. Have your limit order waiting right at the top of the window? Absolutely. And try it, Mark. Try it on simulator 100 times. Show me every picture. And we're right at the top. So Safia, absolutely. Let's go through and start at the first one. Rules 1 and 2 are met on the 13-2. I have strong triggers. I have no termination conditions. All I'm doing now, Safia, is I'm looking at my 5-1 and saying, where are the areas? Where are my fibs? Where are my mid bands? Where are my 1-to-1s? Are they going to be inside of those strong, large triggers? All I'm doing is saying that I've got the rules met. Now I need the smaller chart to cooperate. Right here, Safia, I've already made the decision. Let's see if we have an opportunity. Not so much. I'm going to scroll back a little bit. Honest to goodness, Safia, right about here, if that fib wasn't there, let me get rid of termination conditions on this chart so that we can just focus on the entry. When everything looks like this, when I have odds favorable, when there's nothing in the way, do you see how the 5-1's going down, guys? All those bars are going down. The large triggers are coming down. All I'm doing now is I'm identifying where are my areas. Well, I've got large triggers down and strong. I see a fib all the way up here. I see a 1-to-1 here. I've got a whole bunch of fibs here. There's a mid band. So I'm just becoming aware. And that market continues down. And I'm waiting for a reversal bar. And now once I get that reversal bar, now I can create my window of opportunity. Because this says the market may be pulling back. So let's do it again. Let's use the shape. Here's the top of the triggers. Here's the bottom of the triggers. Do you see it? Strong, wide, in the direction of the trend. Here is my lowest point of support, or resistance, excuse me. Here's my highest point of resistance. I knew essentially where it's going to be. And CJ, the reversal bar is this green bar after all of these red bars. Red bars are down, green bar is up. So it's a reversal bar. Does that make sense? Cool. So let's put our window of opportunity on here. And guys, remember, in a strong moving market, these triggers are coming down. Our window of opportunity may change a little bit. This one didn't get us outside of large triggers, right? Not our trade. So look at our window now. Our window goes from the lowest point of resistance to the highest point of resistance inside that window. Couldn't I just activate a limit order right here and say if the market pulls back to this area of resistance inside of favorable large triggers, then I have the advantage of momentum, I have the advantage of no termination conditions, and now I have the advantage of recognizing where the market is likely to continue. And now I'm in the market. And then I'm going to go back to this one. My initial stop will go below that window of opportunity. My initial stop Mark, not any more than I should wait and see if a plane's going to crash through my roof before I decide to sit down for breakfast. I'm not trading on what might happen. I'm trading on what's happened, right? Am I making multiple trades aligned with the momentum while pulling out with retracements, but re-entering with momentum to capture all the profits? D, I'm not. I think I understand the question. I'm not. The only trades I'm taking are the ones where I have momentum, where I have no termination conditions, and where the market pulls back to an area of resistance inside of favorable large triggers. My initial stop is going to go below the window of opportunity. So guys, on this one, my initial stop is going to go above the window of opportunities. It's typically 12 to 14 ticks. D, you can do anything that you want to do when you're confident reading your indicators. And there's people that do exactly what you're talking about. But for the sake of this class, for the sake of keeping you guys focused on learning how to read your indicators, I'm going to tell you, focus for 30 days on this entry. Focus 30 days on getting inside of that window of opportunity. Focus for 30 days on understanding momentum and termination conditions. And spend 30 days nailing that entry, because these entries, no, you're great. You're excited. I like it. Don't lose that. Focusing on these entries is what's going to make everything in your life easy. Because look, I've got my first reversal bar. I can reduce risk behind that reversal bar. I've got approximately 6 ticks of risk on this trade now. If I was in that market at 92, it didn't blink until 71. That's over $200 of profit. Pretty cool, right? So guys, this is your focus in the beginning. Work on those advantages. Sophia, did that help a little bit? Market pulls back. Area of support inside of favorable large triggers. Initial stop below or above the window of opportunity. And guys, the high probability trend trade is a trade that typically 70 to 80% of the time has the potential to win. So D, this goes to the second half. If you can capture on a 2-lot $300 every time you take a trade, and you take that trade, let's say 4 times a day, 3 of them win, 1 of them lose, because anything that wins 70% of the time has to lose 30. And you make a grand total of, I don't know, $900 a day. Awesome. D, at $900 a day, what is that? $4,500 a week, $18,000 a month on a 2-lot. And that's kind of how you think about it. Do you need more trades, or do you need the best trades? My goal for you guys is that you take the best trades with the advantages, and then you can expand into your comfort zone based on it. But this is what we're looking at in the beginning, guys. The first 30 days, focusing on entries. Waiting for the advantage of momentum. Waiting for the advantage of no termination conditions. Once again, smalls have broken, large have not. This looks exactly like the one we just did, doesn't it? It's a 50-50 trade. The smalls are through the area, the large are not. We haven't reached the divergence low yet. Does everybody see the window of opportunity? And then this brings us to a question that you're going to have to ask yourself. If this area only has the potential to break, are you going to be comfortable with a slowdown on the 5-1? Are you going to be comfortable with a loss of momentum? This is a medium probability trade that would have to be managed assertively, which means that if you do take the trade, you have to identify your first trouble spot, and that's this divergence low, right? That's also this Fibonacci area 96 that hasn't broken. It's not a high probability trade, it's a medium probability trade. And maybe if I get a second divergence and those small triggers work inside, I'll exit the trade. If I'm in at 94, if I make it to 90 or at 04, at 94 it's $100 profit. Maybe I take $100 and then get to break even as quick as possible. Guys, you're going to develop a management plan based on your entries, based on nailing the best entry. But if you can get into a trade, are you ready? With 5 or 6 ticks of entry, support is blue, Mark. Resistance is red. Here, let me give you this picture again. Mark, I want you to steal this one. The arrow with the price Where do you see an arrow with price? Right here. That's just the price of the fib. At what price is that Fibonacci support? That price is 78.86. It's just a marker. This is the price of the market. And whenever we get Fibonacci support or resistance, that marker will light up for you to make it easier to recognize. Guys, if you took this medium probability trade, you've already captured $100. You're approaching your first trouble spot. Some people, this will be their first target. You have a set of rules that say maybe if divergence prints and the triggers are inside, I'll exit on that area with a potential to break that hasn't broken yet. And then on my 13.2, I can identify where the market's likely to go based on this divergence low, based on no trigger lines. This is where the market's likely to stop. This becomes a great place to potentially take profits, doesn't it? Medium probability trade. Manage assertively. Get in, get paid, get to zero risk, and be willing to not hit a home run on a trade that may not be a home run trade. Does that make sense? You're watching it live. You're watching the same formula come to fruition right in front of you. Your job is to learn it. Your job is to study it. Your job is to go back and take 1,000 pictures so it's burned in your brain. Guys, I'm going to take just a minute. I'm going to leave you with this crude oil. We'll see if that momentum pushes it to the next area from an area of resistance inside of favorable large triggers, or if this area that hasn't broken yet decides to hold because of losses of momentum on the 5-1. It'll be exciting to see what happens. I'll be back in just a few minutes. And then when I come back, we're going to do two things. I'm going to start looking at all of your charts, the things that you post. I'm going to answer your questions. We're going to look at your analysis. Where it's pretty much going to be the Gary show. He's the only one posting right now. Thank you, Gary. You're going to keep me busy. And I'm going to talk about writing a plan. I'm going to talk about putting yourself in the position for success in the first 30 days. I'm going to give you guys the absolute clearest path I can give you. I'll be back in a few. Man, the market has given us every lesson we need, isn't it? So let's take a look. What do we see? New users, help me out. Do I have odds favorable momentum? Is rule number 1 met on this chart? Zeba says yes. I'm going to use a checklist. CJ, you say yes. Guys, I agree. Safia, absolutely. All right, so we have odds favorable momentum. Remember, all we're focused on is the best of the best here. Do we have a termination condition? What are we going to call that one? The smalls are through, but the large are not. You guys remember we call that a 50-50, right? Which means that it has the potential to break, but it hasn't yet broken. Is everybody comfortable with that term? Smalls are through with odds favorable momentum. The large remain above. This is an area with the potential to break, but it has not broken. We do not have the advantage of a clear path. We still have a rocky road. Did we have an area for entry inside of favorable large triggers? Guys, look at that. Beautiful, right? What a great opportunity. On this 50-50 trade, here's a little chart reading for you. Remember, it's a medium probability. It has to be taken and managed assertively. One divergence lets me know that the market is slowing down. And that market's slowing down at a time when an area hasn't yet broken. So if I take this trade, I'm going to take quick profits. I'm going to get $100 in the bank. I'm not going to mess around. I'm going to get to break even. When this second divergence prints, all right, this is bonus points, guys. Where are the trigger lines at the time of that second pivot? Are they still odds favorable on my smaller, faster chart, that chart that's going to show me change quickly? Or have they already gone to anything can happen? Do you see it? You're probably not going to see it in the moment. But now it's anything can happen, right? So I've lost momentum twice. I have anything can happen triggers. And I have an area that hasn't yet broken. Guys, being able to read your charts gets you out of this trade. It says to you, hey, I'm losing the advantages of that clear path. I'm losing the advantages of momentum. No matter what happens next, this becomes a great management opportunity. And some days it'll go right to the area. And some days it'll rocket right to the moon. $50-50 trade. First divergence, smalls kind of outside. Second divergence, smalls inside. Market changes direction. Remember, guys, that we're trading rules that have been proven to win more than they lose. We're trading advantages that give us the best chance of success. Being able to read your indicators is going to help you identify whether or not the advantage is still present or whether or not that advantage has gone away. And you're going to be able to do this in the first 30 days with a very simple plan. And I'm going to share this with you guys. This is an example of how to write a trading plan. For a brand new user, your focus is entries for 30 days. You're not working on management. You're not working on counter trend trades or edge trades. You're not working on high volume area trades. You're not looking to catch every penny of every move. You're looking to get in the market at the absolute best spot. So I want you to write on a piece of paper. I want you to steal this one and write your name in crayon at the top. And I want you to use the phrase, my trade is, to do nothing more than define an entry point. My trade is the high probability trend trade. This is a trade that has been proven to have the potential to win 70 to 80% of the time when I take it. This is a trade that teaches me to read my indicators. This is a trade that allows me to identify the absolute best of the best area so that I may reduce risk and increase profit potential. And in order to pull the trigger, I must have the conditions of this checklist met. Guys, I just put the checklist in the room for you. I gave you one checklist that you can print out and put on your desktop. Use that same crayon. Are your rules met? Guys, I can tell you that nobody in the history of me providing this checklist has ever followed it to the letter for a full week and done less than 75-80% winners. Doesn't it make sense as you learn your indicators? And that doesn't mean that'll happen for you. If you're not hitting it, you need to post in the room and let's see what you're doing. But doesn't it make sense to give yourself that advantage, to make sure that you have the advantage of momentum, a clear path in an area where the market is likely to continue every time you're willing to take a trade? Guys, that's your first step. Nail your entries, right? And then I want you taking pictures. I want you taking so many pictures. The second spreadsheet, or the second checklist that I put up there for you guys, is the exact same checklist, the exact same rules, but I stole pictures. Safia, have an awesome day. Thank you for being here, and thank you for the great questions. The rules with pictures stolen from the user guide. What does each rule mean in pictures? Guys, take this one, put it on your computer, study it every morning before you start. But the most important thing that you're going to do is you're going to take pictures. You're going to go back, you're going to circle those tails, you're going to see if they were entries, and if they were, you're going to take a picture. When Gary posts in the room of the perfect high probability trend trade, when Ziba posts in the room, when I post in the room, you're going to steal that picture. I want you to set a goal for yourself. I want you to take 10 pictures a day. Because 10 pictures a day is 50 pictures a week, right? That's 200 pictures by the end of the month. At the end of your first 30 days, 200 pictures of high probability trend trades, of patterns that you see, things are going to start to click. By the end of the year, you're at 2,400 pictures. Guys, I can tell you, if you're really taking this serious, that is an unbelievably low number. My library started, I want to say at the beginning of the year or just before. Awesome, Mark, take care. I'm up over 3,000 in a couple months. I know John Novak has about 28,000. Take as many pictures as you can, put them in your spreadsheet. This is what my best trade looks like. Guys, if you follow this for 30 days, you're going to be able to understand where the market is likely to stop, where the market is likely to continue. You're going to be able to use Fibonacci to determine where the market is likely to go. And you're going to be able to take trades based on clearly defined rules to have those advantages. All right, I'm going to scroll up and I'm going to look at pictures now, guys. So I'm scrolling back and forth. I'm going from top to bottom. So if I miss a question, I will catch it, but sometimes it takes me a second. And guys, oddly enough, I got things going today in class. I was watching the market, taking pictures for you guys. And I took a picture that looks exactly like that one that we just did, that 50-50, right? Coming from a termination condition that creates a full reversal. That full reversal gives me odds favorable momentum. That odds favorable momentum gets me an area with the potential to break but hasn't broken. One divergence prints. And guys, true story, I had just come back from fixing eggs and I saw it and I jumped in a little bit late. Normally I would have been in a little bit higher. And I took a very mechanical approach on this one. I took $100 on my first one before it got to that area. And then I did a little chart reading. I noticed that a second divergence printed, but I also noticed that my small triggers were still outside of the large, and I was willing to keep the risk on the trade because of the good top, because of the no terminations, because of that 50-50, because of the momentum. And I captured my $200 on that one, guys. My ability to read charts in the moment made that an easier trade to manage. And then here's the kicker. The more you grow with the software, you'll recognize when that 13.2 says we're more than likely to get to that next area. Does that make sense, guys? That's everything that we teach. And I just did it live in the morning. We talked about it live in the moment. Creating expectations based on patterns. Pretty cool, right? That's it. Every day. Every day, this is what we're going to focus on. Every day, you're going to read advantages. You're going to post pictures. You're going to take trades. And you're going to grow every day until you get to where you want to be. And I'm committed to the ride. We showed this one this morning for Jonathan. Lots of momentum. Area likely to break. Potential to break based on momentum and trigger line location. No slowdown on the 5-1. Picture perfect entry. And an awful lot of money, trusting the trigger lines to get him to the next area. Jonathan, what a great trade if you're listening. All right, Gary. Odds favorable, still below the area, didn't quite make it on your 21. Don't have odds favorable. You have small. You have a gap back to them. Not a high probability trend trade there. That's not a market flow signal, by the way. That's not an antenna bar. It doesn't have an arrow. And it's not a yellow reversal bar. It's a good read on an area likely to hold, but there really wasn't a high probability trade entry there. And then Gary coming through, strong triggers, 50-50, strong triggers, window of opportunity, strong triggers. That's the exact one that I took this morning. Worked out wonderful. And then you overanalyzed a little bit. Guys, the more you give yourself to look at, the harder it is to take trades, the harder it is to make those decisions in the moment. Keep it simple. Until you're consistently making money, keep it simple. And then Gary, everything says down, area is broke, pull back to the area of resistance inside of favorable large triggers. You take quick profits to the trouble spot, and then you let divergence take you out of the final one. Nice job, Gary. Great trade. Great trade. Great analysis. It did go lower. Can I tell you guys something? If your rules say get out, don't worry about what happens next. If your rules say don't get in, don't worry about what happens next. Two choices in your life. There's two things consistent with profitable traders that I've realized, is that they don't care about anything other than executing their rules. They don't care about anything other than making sure that their entries are where entries belong, that their exits are rules-based, and that they are consistently executing their plan because their plan provides them advantages. Overrun at the fibs is not a termination condition, is it? All the trigger lines are through. This is just a pivot. Nothing more than a pivot. Nothing to do. You got to let the market settle down. Does everybody get that? We saw this exact same picture earlier. Not a pivot or not a termination condition. If price decides to come back and retest it, triggers don't break it, absolutely. It could be a termination condition. If all of the trigger lines get above this area of support, maybe it was just overrun. But it's not a termination condition yet, Gary. Great picture. Elvis. Odds favorable momentum on a very large chart. Odds favorable momentum on a smaller chart. Nailing your entries. Making the money. Nice job, Elvis. Looks good. Looks good. Gary, same trade. Smalls below, larger wide. Pulls right back to the area. And this one doesn't go. And it didn't appear. You didn't have divergence. Gary, you had strong triggers, no termination conditions, and a window of opportunity, right? That wasn't very large. Guys, this is your humble reminder that anything that wins 70% of the time is mathematically obligated to lose 30. Losses are a normal part of a positive equity curve, guys. If anyone ever tells you, hey, I've got a software system and it wins 100% of the time, run. I'm not going to lie to you like that. You will take losses. But when you take a loss, you have to ask yourself, did I follow my rules? And if you followed your rules have been proven to give you an advantage. Gary, it was a 50-50 on that divergence low, right? It was a 50-50 on the divergence low. It was divergence directly from a 1-to-1. It was divergence directly from a 1-to-1. Do you see how this had the potential to break? And it chose not to. It's not a high probability trend trade. It's a medium probability trend trade. Medium probability trend trade didn't work. It's a lower win percentage. But that cyan divergence low is one of those areas, right? When we talk about termination conditions straight from the rules, cyan divergence low can act as a termination condition. Guys, so much so that I made this picture yesterday. These are the two most forgotten termination conditions, ignoring these divergence highs and lows. And I did a little synopsis of what I thought. Anytime the market has a divergence low, it represents a specific point in the market, a specific price, where not only could the in control force, so for example, Gary, the sellers on yours, not push beyond it, but they lost momentum. Not only could they not go any lower, but they were losing momentum. So when price comes back and retests that key area, it's like a line in the sand. Where did that picture go? This is like a line in the sand saying we already lost here once. And then it exceeds a little bit with the small, the large don't make it. We go to an area with the potential to break but hasn't broken. We see a loss of momentum on an area with the potential to break but hasn't broken. If you're using a range chart, it shows you that as well. So guys, remember that medium probability trades, no matter how much you want them to work, are still medium probability trades. You still have to recognize these areas as areas with the potential to hold because they haven't yet broken. There's that same picture. Dave B. Oh, you were asking about that one. That was a great lesson on 3 divergences. Elvis. Elvis, you're trading the lower volume crude here, just so you know. I don't know anything about ears, but you are trading the crude oil contract with less volume. I wasn't sure if you were aware. Gary, area with the potential to break but hasn't broken. 2 divergences. Triggers go in. You have 2 divergences, not 1. You've got small barely outside. You've got split triggers. I love that you didn't take a trade there, Gary. Nice job. Great read. Uh-oh. D, is this your first trade post? So D, there's your momentum trade that you were talking about, right? And D, you'll find yourself in great company with these trades. There's a lot of people that love this look. So can I go through? Nice. Use it all the time. Can I go through what I see? You had a potential entry here on the pullback, right? I don't know what it looked like live. Maybe it wasn't. Maybe it was. But if I'm gauging advantages, you have odds favorable momentum. You waited for the smalls to clear your potential trouble spots. You're coming from an area likely to hold. And then maybe an exit just below the fib on this style rather than above. But what a great trade, D. You are looking at things like Ron C. looks at things. You're looking at things like Ed S. looks at things. There's a few traders that have said, you know what, I like the high probability trend trade, but I really love the advantage of momentum, and I love being able to recognize these areas where the market has to clear and is likely to stop. D, it's a great trade, and that may end up being the one that you fall in love with. All right, Gary, potential to break. You wait for market flow confirmation. You take quick profits, and then you get to a 0 loss as soon as possible. Nice execution, Gary, on a trade with the potential to break but hasn't broken. Second higher divergence, triggers in. I love it. I think we talked about that one live, didn't we? X-Romance, nice to see you. Been a while. Odds favorable, nothing in the way. Picture perfect entry, quick profits, profits again. X Romance, nice job. What a great trade. And look at this. X Romance is using a couple things that we don't use, and that's okay. I don't ever get jealous. Gary, small's above the large are wide. We're 50-50 on this area. One divergence prints, picture perfect entry. Second lower divergence, small's inside. Look at it push down. Even if you didn't take the trade, right? We can still use this one for study. Area with the potential to break but hasn't broken. 2 losses of momentum, small's inside. If you took it when the momentum was still there, you had an opportunity for quick profits, and then your smaller, faster chart told you, hey, Gary, it's probably pushing lower. And then everything starts to get wonky. So, Gary, you missed your best of the best. And then when the market said it was going lower, it did exactly what it said it was going to do, right? Dave B, let's see what we got. Guys, if you're new to the class, this is what we do each and every day, right? You guys take trades. We talk about what you see. We talk about what I see. We focus on consistency. We focus on patterns. So here's your first one. All rules met. Rockstar entry. Beautiful profits. And then we come into that same one, 50-50, right? 50-50 trade. Dave B recognizes it. One divergence, he says, pshaw, let's go. Gets in at the area. Second, lower divergence, small's inside. He says, I'm not going to spend any money on this one. Great job. Dave B, picture perfect, rock star execution. Wonderful chart reading. Gary, we already saw this one, 50-50 on that divergence low. Just didn't work, right? You took a chance on an area on an area that hasn't broken. It had divergence. And the key here, Gary, is that divergence came directly from one-to-ones, right? It wasn't just divergence, but it was divergence from an area on a 50-50. Should you have bailed on the market flow signal? I don't see a market flow signal. I see a breakout bar. You never got a down signal. You never got a long signal. You really just got nothing. All you got, Gary, was a bunch of bars going against the trade. You had divergence, and then you had an antenna bar, and then you had an even more extreme antenna bar, and then you had a breakout bar, and then you had another up bar. Does that make sense? Gary, I think you're confusing market flow signals a little bit. So go back and study this one, Gary. Go look at the pictures. What is an actual signal? A green arrow or a magenta arrow? That's a signal. A reversal bar, just a bar that's green, isn't a signal. An antenna bar at the area is a signal. An antenna bar in the middle of nowhere is not. A white bar in the middle of nowhere is not. Those yellow reversal bars can be a signal. What happens with market flow, guys, and this is why we add it after we're so comfortable with the rules, is that every time you learn a rule, you're starting new, right? Every time you learn a rule, you're beginning that journey again. So if you're going to add a third chart, you've got to go through the journey. You've got to make sure you understand the rules associated with that chart. You have to make sure that you understand the application. And guys, that's what simulator's for. Go through. So Gary, review the market flow signals and what is a signal and what isn't. And it's going to keep you from anticipating or using things that aren't signals to get in. Right ear form, short, then follows always. Boy, I hate absolutes. This pivot's lower than this pivot. This pivot's beyond the area. This pivot's from an area. Why is that not an ear? Elvis, I like it. You guys that use these, these technical patterns, that's awesome. Or these, I don't know what you call them. Whether it's a head and shoulders, bear flags. Moment of truth, guys. A little honesty here. I have absolutely no idea what an owl ear is. I understand head and shoulders because I've seen it a million times. I don't use trend channels. I don't use flags. And I know it sounds crazy. I use a checklist that provides advantages, and this is where I'm comfortable. And this is what I teach. But every time, Elvis, you post something like that, I get a little bit smarter, and I appreciate the posts. But if I see an owl ear and my rules aren't met, well, then I'm not taking a trade. Just incredible. Still one of the best names, right? Everything says down. So with, all right, Justin, maybe you were out to lunch. Maybe you were having breakfast. Sometimes the coffee kicks in and it takes a minute, right? Let's talk about this one. Everything says down and it's absolutely screaming. I love this one with one divergence and the small triggers outside. I love this one for a hold with the small triggers outside and a second divergence. Everything starts to work its way down. Now I have a third divergence in the same general location. It gets a little more difficult, right? Elvis, if you go back and you look at 100, it wins 100% of the time. 100% of the time, without fail, 100%. Get rid of all your indicators. Awesome. One of the things on this one is, guys, make sure you're not missing the easy ones. The easy ones are from these windows of opportunity, strong triggers. Just in here, the smalls have gotten to the other side, right? There's a big split between synthetics. It's all right, Elvis. We don't have to learn about owl ears in here. Take it to the traders chat. It's just a little more appropriate on that end rather than trying to do the technicals here in the educational room, please. Thank you. Yeah. So that becomes a rougher look. It works out for you, for sure. And I'm glad that it worked out for you. But your area is kind of caught in between, right? No, Elvis, I said that I don't use them. I didn't say I don't use them. Would you please teach them to me in class? Thank you, though. I love the input. But let's do it in the traders chat. I'll go over there after class. In here, I want all my new people focused on the advantages, being able to identify. Thanks, Elvis. I appreciate you. And guys, I go on tangents sometimes. Everybody will. That's okay. But we got to reel each other in sometimes. Good stuff. Justin, best of the best. Give it away. But look at the momentum on the 13-2. That helps a lot. Without a doubt. That much momentum makes you feel pretty good about taking one that's less than perfect. Nicely done, Justin. And yeah, that one that I took this morning, I wasn't at my computer. I came in and it looked so great. I was like, aha, I got to get into this one. So I had a late. Gary, just helping us identify termination conditions. I love it. Price reaches resistance. Absolutely no trigger lines break through. We've got an area likely to stop the market. Because of it, Gary says that is a low probability. Gary, that would be an actual signal, right? You comfortable with that? That would be a market flow signal. Do you see it, Gary? Does everybody see it if you're using market flow? And then can I give you the other side of that? Guys, the rules have to be true. If you start adding this 8-range chart, and this is for my more experienced users, If you start letting every signal you see get you into a trade when the rules aren't met, you're going to overtrade and underwin. I know, I've done it. I lost about 1,000 trades chasing market flow. Smalls above the large are wide. They're angled in the direction of the trend, guys. Live market, crude oil. Medium probability trade. It's an area with the potential to break but hasn't broken. And my window of opportunity is 4 ticks wide. Medium probability trade, right, guys? Do you see it? I don't know what's going to happen, and only my plan will tell me whether or not that's a shot I'm willing to take. Alex G. 50-50. Smalls are through. Large are not. Area with the potential to break but hasn't yet broken. No divergence. Strong triggers. This one doesn't work out, does it? It happens. Medium probability trade, Alex. It just didn't work. Only thing I might note is how close those small triggers are to the large. Do you see it? Yeah, that may be the only thing that I notice initially. And then on an area with the potential to break, Alex, you got a reversal bar with stranded sellers. Again, if you're going to use the 8 range, learn how to read it. There's a lot of great information. You also got another reversal bar up with sellers stranded at the bottom. Alex, this is a great opportunity to wait for market flow to give you a signal to the downside, and it would have kept you out of a loser. Because you're saying it's got the potential, but it hasn't, right? I know. I see it. Why do you have this chart then? Would be, does that, and I'm not trying to sound ugly. I didn't want that to sound ugly. If it did, I apologize. If you're gonna use a chart, you use this chart for divergence? Okay. So you're saying no divergence, right? Great. So Alex, now we have a next level lesson for you. With an area with the potential to break, do you recognize this bar? This is 3 bars in one. Let's do a little market flow lesson because we can. This is a reversal bar. If nothing else, it's just an indication, hey, I've got a reversal coming from the pivot at the area where the market has the potential to break but hasn't broken. It's also an antenna bar. I can never spell antenna. Do you guys have one word that you just can't spell? I have an antenna bar. What's an antenna bar mean? Well, it means that the market pushed all the way down, couldn't do anything with it, Alex, and closed with this body up top, and the highest volume was below that body. So that is an indication to me. And then finally, I have stranded sellers. And once again, what that means, Alex, is that this magenta dot at the bottom means that the sellers tried as hard as they could, and that's where they all accumulated, and the buyers won. So guys, this is a great way to begin to use the 8 range chart a little more. And then another way I'll use it is when I have these indications here, I might wait for one of those same signals at the best of the best area. Because remember, the 13.2 isn't perfect. Does that make sense, Alex? So right now you're using it for divergence, and now you'll start to go back. Justin, this would be a medium probability trade. Smalls below the large, larger wide, angled down, but the area hasn't broken, right? It's a medium probability trade. On 2 charts, Alex, I'm with you 100%, right? No, not for a long. Everything says down. On 2 charts, Alex, I'm 100% with you. Take it all day long. And now you can start to add a little more information, right? Now we get that little bit more chart reading. 90% of what we do is chart reading. And it turns out to be great stuff. Good job. Great picture. And I think that there was a great lesson in there for you guys. So I appreciate that. Paul, let's see what you got. Paul, same lessons, 50-50, no divergence. All right, Paul, I want you to tell me at the time of the reversal bar, when you were making your window of opportunity, that's it, isn't it? Justin, I'll look at your picture. It looks like it didn't work. But Justin, maybe this will answer. 13.2 is red here, right? At the time of the entry, everything is red and everything is down. No long trades. I'll look at your picture in 1 second. Yeah, Paul, remember that we build that window of opportunity at the reversal bar, right? And it can change a little bit. But my just initial look is that's a big window of opportunity on split triggers. Do you see it? Don't always see it in the moment. And then to compound that with the reversal bar right here, notice that on your 8 range, Paul, small triggers don't break through, large triggers are wide above. Couple little things there to help you on that one. On just 2 charts, it looks great, except for those split windows. 2 divergences at the termination condition, right? Market flow down, but there's no rules met. Gary, good read. Let's see if this will open, Justin. There it is. So where are you talking for a long? Can you give me the same picture, Justin, but with a circle? Gary, no rules met. Everything says up. 2 divergences mean nothing at a termination condition, right? It's too soon. That signal doesn't mean anything because rules aren't met. You with me? That's all I was saying. Good read. All right, Justin, what price are you talking about? Where are you talking about on the 13.2? There's a 5.1. There's a 13.2. Here's a 50-50 with a pullback, but I'm not sure if that's the same price over here. I think that's actually lower. Here's a termination condition that you have to wait for it to break. And then when it breaks, there's your potential stab back right there. Smalls outside, area of support inside of favorable large triggers. Everything breaks the area. And that is, from that up move, probably your only real opportunity. But from 22.50 up to 28.75 is a pretty good one, right? 41.26. Right here. Right here. Am I looking at it right, Justin? Let me get some noise off of there. You're talking about this potential entry right here? Awesome. So do me a favor, Justin, when you post in the room, when you said, where's the long, if I'm looking at someone else's chart, I think you're talking about their chart, not the live market, right? So Justin, are your rules met? Let's do that. Guys, I'm not going to tell you if it's a trade or not. I'm going to tell you if the rules were met or not. That's all I'll do. On the 13.2, Justin, do you have odds favorable momentum? No. Smalls are inside. Right? You've lost momentum there. On the 13.2, do you have no termination conditions? No. You're directly into resistance with absolutely no trigger lines through it. So Justin, if those 2 aren't met, Rule 3 doesn't matter, does it? If you're a rules-based trader, Justin, are you trading the high probability trend trade? Is that your goal right now? Because if it's not, that's cool. We'll look at other advantages, but this termination condition with 2 divergences with small triggers inside, man, that one's got to go without me. I don't have any advantage of momentum. I don't have any advantage of a clear path. At that point, I'm trading hope. And look, it does break, right? Eventually it breaks. Just because it breaks doesn't mean, no worries. I think it's great. I think in the moment right here, there's just nothing to do. You have to, this is the point, Justin, in your picture, and everybody, not just Justin, where you say to yourself, all right, the area hasn't broken. It either has to break or it has to reverse. But until they give me something definitive at this area, I'm just going to sit on my hands. I'm going to go make a sandwich. So all the trigger lines get above, right? The smalls have returned to the large. They're still not really outside. Two divergences. The second one's lower. It's right there inside of the large. Probably going to push down lower. Not the best look, is it? And then we just go through repetition over and over until these become second nature. And Justin, that's exactly the way to do it, is to keep posting pictures, to keep asking questions, because we'll talk through this every day. We'll talk through what we see every day until it becomes second nature. Price reaches resistance. Absolutely no trigger lines break through, guys. Going long, even with odds favorable momentum into that spot, is financial suicide. Do you see it? It's easy to say, but it's strong, Mark. I want it to go up. Mark, look at the momentum. It says that the odds are favorable. That's only one rule. Rule number 2 says that more often than not, this long is going to separate you from your money. Does that make sense, guys? Can you give me a Y in the room if you're with me? All we're doing now is just chart reading, guys. We're going to do that for the rest of the day. Ask me some questions. The reality of it is that your chart reading is going to help you clearly define advantages, and it's going to help you clearly define where those advantages are no more, right? That's all we're doing. You ever been out on a first date and they make an odd face and you don't know if they're mad or have gas and you're like, oh man, I'm just not sure how to read this. Should I be worried or should I giggle? And then by the 5th date, you start getting those repetitions, you know kind of where you're at. Oh, she's not upset. She just farted, didn't want me to know, right? Termination condition creates a full reversal. Full reversal gives me odds favorable momentum. Can we take a picture on termination conditions real quick? And then, Joel, I'm going to go to your entries. I don't, Justin. When's the last time you built a brand new workspace? And that's crude. What contract are you on crude? Are you on 323 or 423? The volume switched and the contract rolled this morning. I didn't look at your picture. Let me look at your picture. I'm asking you, but I can just, you don't have to type. I'll look. That's the S&P. So what we're looking at right now is crude oil, though, not the S&P. Yeah, so if you're on 323, do you know how to do the roll, Justin? Are you comfortable with that? That's based on a true story. Awesome, no worries. So guys, termination creates a full reversal. Full reversal gives me odds favorable momentum. I want you to recognize this pattern. This is the gap theory. When price accelerates, hey Gary, you'll get better answers in Trader Chat than you will here for questions like that. There's a wealth of knowledge over there. And there's a lot of guys that have set up really great templates. And you'll probably get every answer a lot quicker there than you will here. Most of the people here are still working on reading indicators. Cool. And then again, as always, if you run into a hitch, man, send me a message. I'll get you taken care of. Price accelerates all the way away from those large triggers. And I want you guys to see this. This is a reversal bar marker. This is the point at which this bar becomes an up bar. Is everybody with me so far? This is a pattern. This is your gap theory. What does gap theory mean? Gap theory says that when price accelerates for those large triggers, fast, aggressive, and it hits maybe Fibonacci support, a mid-band, it snaps back to those triggers. So price accelerates away and the large triggers remain a full bar away. They're above that reversal bar marker. Very often price snaps right back. This time it didn't because the market's been giving me so many great lessons, it thought it would mess with me. Here's an example from this morning. Price pulls away from support, large triggers don't follow, and it closes the gap. Here's another one. Price accelerates away, large triggers remain above that area of resistance, a full bar away, price snaps back. There it is again. There it is again, over and over, guys. This is a pattern that lets me know when that 50-50 may not be the best of the best. We never got an area inside of favorable large triggers anyway here, did we? Rules weren't met. Now we have a loss of momentum at a divergence high. Do you see it? Got to let it break, right? This is a termination condition. So we have to go through. Either it breaks or it rolls. Those are the only options. All right. I don't know, Sam. You'd have to go back and take 100 pictures. You'd have to create entry conditions. You would have to determine when it's appropriate to take it, when it's appropriate to not. And you'd have to build a plan around it. You'd have to say, my trade is this. Guys, I don't teach low probability trades. If you present them and write your rules on the chart, we'll talk about what I see always. My goal is to get you consistent. My goal is to get you in a position to where you can read charts so well, Sam, that you'll say to yourself, where are my pictures? Perhaps if everything is above support, if price pulls back to support, if the large triggers don't follow, and maybe if I get a market flow signal from that key area, I'm willing to take one shot to get back to the triggers. Maybe you'll say, if my 21.3 has odds favorable momentum to the upside, and my 13.2 pulls back to support and the large triggers don't follow, and I get a market flow signal, maybe I'll take an opportunity that direction. But it comes through repetition, Sam. And there are people that take that trade, but I don't teach that trade. So I need you to do the study and come through and build your rules. But in the beginning, Sam, it's your ability to read your indicators that's going to set you up for whether or not that's successful. Does that make sense? Awesome, cool. Guys, I'm all for you going outside of your comfort zone. But remember, you can't ask me, is this a trade? You got to say, hey, here's my rules. Were they met? And then we get to where you want to be. All right, nothing to do on the S&P right now, right? Smalls below the large, larger wide, angled in the direction of the trend. Area with the potential to break but hasn't broken. I've got a window of opportunity that is really 2 lines wide, right? A mid-band and resistance. If then, if I get a trade, if I get a setup, do my rules allow that trade? I don't know. Racha, is it? Racha, does it have odds favorable momentum? Racha, do you have rules? And not just, I'm not picking on you, Racha. Here's the reality, is if you have rules that prove that they win more than they lose, there might have been 100 great entries in there. This might have been a great entry from somebody. That might have been a great short for somebody. That might have been a great long. So let's go through on the basics and let's ask ourselves, do we have odds favorable momentum? Let's do it high probability trend trade. Racha, does it have odds favorable momentum? This is how we do this every day. You have to get to the point to where you start asking yourself these questions. What do you think? I think you know the answer. Absolutely, right? That's some odds favorable momentum. No termination conditions, Racha? Absolutely. Price didn't reach a key area. Everything's going up. Nothing in the way. So Racha, so far we're 2 for 3. Rules 1 and 2 are met. So now I have to ask myself, did I have an entry inside of favorable large triggers on the 5-1? In Racha, I can't see. 4108, 4108. It looks to me, and it's hard to tell because it's a little squished, but it looks to me like that may have been a pullback to support inside of favorable large triggers. You didn't have one? It looks like it may have been. Is this Eastern time on your chart, Racha? Yeah, cool. So let's go back. Where are we at? That was the S&P, 10 a.m. Eastern. Let's do it together. Because, guys, this is a great way to study. It was this one right here. So this is another way that I can circle, or that I can do this. Guys, you see that the rules are met, right? Circle the tail. So Racha, let's see if you had an entry. What do you think? Was that a good looking trade? Looks awesome to you? Looks amazing to me. All right, so Joel wanted to work on entries, so let's do that. So Racha, do you recognize rule number 1? Odds favorable momentum. Cool, let's make this simple for us, okay? I don't want to overthink anything. All right, so we have odds favorable momentum on the 13-2. And we have no termination conditions on the 13-2. Racha, are you comfortable with termination conditions? Price has to reach an area, the trigger lines remain below. In this case, resistance. Awesome. So rules 1 and 2 are met without question. When the rules are met on your 13-2, and Joel, this goes into your entry lesson. This is going to be the look on your 5-1, right? Everything's going to say up. Strong triggers. Triggers are rolling, heading in the direction. Price bars are up. Guys, this looks just like if I go to the user guide and I go to the entry section. Looks pretty familiar, right? Everything says up. So Racha, we're going to focus our attention right here on what areas might fall inside of these triggers. Are you with me? But the rules say we're going to use a limit order to buy or sell a pullback. We'll put that in the room. We're going to buy or sell a pullback. In this case, we're going to buy. And a pullback, Racha, starts with a reversal bar. So there's our reversal bar. At the time of the reversal bar, I'm going to create a window of opportunity. It's from that highest point of support inside of these green large triggers to the lowest point of support. Guys, give me a Y in the room if you're with me here. Awesome. So Racha, the rules say put a limit order just above that window of opportunity. Is everybody comfortable with that? You're going to right click and you're going to hit buy limit right there. We're going to wait for the market to come back to us. All right, let's see if we get filled. Uh-oh. It's going the other way. Do we jump in? A lot of people do. They're like, oh, it's going without me. I'm going to jump in. So we just got another reversal bar. If the first one doesn't make it, guys, we're going to start the whole process over. Do I have odds favorable momentum? Absolutely. Do I have no termination conditions? Without a doubt. Nothing's changed on that 13.2. Now I have a reversal bar, yes. My window of opportunity goes from that mid band to these 1-to-1s. Do you see it? It changes the dynamic a little bit. Now I'm going a tick or two above the mid band because the market's continued up, the triggers have continued up, the most likely spot for continuation has changed. That window has changed. I'm a tick or two above that mid band because as price comes down, that mid band's going up. I'm not going to miss this trade. I have the advantage of momentum. I have the advantage of no termination conditions. So Racha, are you with me so far? At this point, it's just a waiting game. Will it come back and will it fill the order? I don't know. I can't predict. But what I can tell you is that this is where it's most likely to continue. All right, Racha, you're now long at 41.08. Okay? My initial stop, we're going to go through this super mechanical. My initial stop is down here, 41.05. 12 ticks. Below the window of opportunity. Give me a Y in the room if you guys are with me on that. My initial stop goes below the window of opportunity where the market shouldn't go. I'm going to make my first target at $100. I'm going to make my second target at $200. This is all I'm trying to get out of this trade, guys. I'm trying to make $300 on 2 contracts. Is everybody comfortable with that? As you grow with the software, Sam, great question. Amazing question. Is this blue line inside a favorable large trigger, Sam? And this is why I always ask myself these questions. Nope. So is it in the window of opportunity? Not at all, right? So why would I put that much risk on it? Because that's not where the market is likely to continue. Pretty cool, right? I'm not worried about this red line. I'm not worried about this divergence line. The only thing I'm worried about is that window of opportunity from the highest point to the lowest point, and then my stop goes below. It is. Window of opportunity is where the market is likely to continue, right, Sam? Are you comfortable with that? And what does that mean for us? If this is where the market is likely to continue, let's go to this picture. Then I'm using it for entry. But because I've used it for entry, because I've identified that window of opportunity, and guys, this is where words become important. Because I recognize that this is the area where the market is likely to continue, this area below the window of opportunity, Sam, is where the market shouldn't go, right? And if it does, I don't want to be in the trade any longer. Does that make sense? The market should either bounce somewhere from this mid-band to these 1-to-1s. This is the most likely, highest probability, best of the best chance for success. If the market pulls all the way down to 41.05, guys, I'm going to take my loser. I'm going to understand that it was a cost of doing business, because anything that wins 80% of the time loses 20% of the time. But I'm in this market at 41.08. My initial stop is below. And guys, you have profit targets at $100 and $200. Is everybody comfortable with the scenario right now? So now that we're in, I'm waiting for a reversal bar in the direction of my trade. And there it is. And this is kind of a double bonus. Once I get this reversal bar, I'm 2 ticks below it. My risk went from 12 ticks to 4 ticks because I waited for the pullback, and because, Sam, now the market's doing what we anticipated it to do, right? Now it's going in the direction of momentum. Now it's going in the direction of the trend. Now it's continued from the most likely spot. And guys, look what happened on the first bar. Because of our amazing entry, Racha, you already have $100 in the bank. How cool is that? Took a fraction of a second. Your first target's hit, $100 in the bank. You can go to break even. If you're a brand new user, first target reached, go break even. One of two things is going to happen at this point, guys. You're either going to reach your second target of $200 with all that momentum, with nothing in the way, with that perfect continuation point, or the market's going to come back and stop you out break even. But because you already have $100 in the bank, it's pretty easy to hold that position, right? I'm not messing with my stops anymore. And there it goes. Racha, congratulations. You went from, was this a good trade, to being able to identify through historical study that it was in fact a good trade. You were able to do a bar-by-bar scenario to make sure that you don't miss the entry when this sets up next time. And you were able to use a very mechanical approach to take profits at $100 and $200. Now I'm going to go ahead and I'm going to put the indicators back on my 13.2. And now I'm going to show you the next level in management. If I have strong triggers, right, and I have no termination conditions, I can use Fibonacci to determine where the market is likely to go with all that momentum. 41.1285, see that Fibonacci area right there? It's only 3 ticks higher than my $200 profit, but doesn't the momentum say that I should get there? Doesn't everything say that I should get to that red line? And guys, 3 ticks is what? 50, 62.50? Do that 10 times a week. Make an extra $600. Make an extra $2,400 a month by being able to let your indicators tell you where the exit should happen. Does that make sense, guys? How'd we do on that one? Racha, so what do you think? Was it a good trade? And then, of course, my next question for you guys, and I love it when this happens, and this is pretty cool. Is Racha and everybody else in this room, can you do exactly what I did? Can you open up your chart and circle that tail and see if it lines up with an area of support inside of favorable large triggers, and then be able to tell yourself, absolutely, this was a good trade? And if you're not sure, instead of saying, could this have been a good entry, Racha, say, here's my rules. I'm not sure if they were met, and then we'll talk about them. But you have to have rules, guys. You have to know what it's going to take to get you into the market. Does everybody have the checklist? Are you guys using it, or are you too smart for checklists? I was too smart for them in the beginning. Kick my ass. Pardon my French. I was way too smart for checklists in the beginning. Guys, I was like a fish out of water. Had no idea what I was doing. Use the checklist. Make your life easy, guys. Tony, it's either one or the other, isn't it? I was too darn smart. Tony didn't believe us when we said that that would help. All right, NG time. Tony the Tiger. Termination condition, 100%. Absolutely no trigger lines through. Large triggers above the reversal bar marker. Acts as a vacuum. No areas inside of favorable large triggers. Coming from the termination condition. Tony, do you see all the rules that you broke if you're looking for high probability trend trades? What about this look made you believe that that market was going to stop on a dime? Or that it was going to break? CJ, I'm still not smart enough to not have a checklist. Do you see it? Brand new users. That is, I could teach a class on termination conditions with this picture. I really could. Rule number 2 for a high probability trend trade isn't even close to being met. Not even a little bit. And then compound that with this look. Right? Compound it with that vacuum. Some days you're going to get lucky, guys. Some days it's going to work out beautifully for you, even when you break the rules. But are you teaching yourself to take the best of the best, or are you teaching yourself potential long-term failure? Because, Tony, if you go back and look, how many times? Yeah. If you go back and look how many times that market doesn't reverse, where did the picture go? How many times this stops it in its tracks, you realize that you lose a pretty big advantage there. I like your execution, but there is too much going on with that one. That is definitely a sit on your hands because there aren't advantages outweighing disadvantages there. Terrence, termination condition. Oh, you take the one before the termination condition. No, we're getting different views here. You've got this one circled, but what you're showing me is this one directly into the termination condition, right? You try to go long, it doesn't work. You let it hit that area, let it start to roll, and take it back up because it didn't quite reach the area. Just a continuation style. When your trend trade doesn't work, it's okay to look for a second entry if the rules are still met on the 13-2, right? And then there's that one that I think we just walked through, right? Same look. Odds favorable, coming from the bottom, haven't reached the areas. Rock star entry, Terrence. Perfect. And I think we just did the bar by bar on that for the entry, and you nailed it just like we taught it in class, right? Paul, are you swearing? Don't swear. The bot won't get you. All right. Who is this? Is this Terrence again? All right, Terrence, you're trading micro ES. I got it. Strong triggers. Using the largest chart, the 21. Your smaller chart says you've reached a termination condition. Well, not quite at the time of entry. Rule number 3 is broken, but you're gauging this momentum to get you with this look from the area back down to the trouble spot. I see what you did there. A little more advanced. Nice read. Letting an even larger time frame give you an overall. And then Gary, we saw this picture already. I think you double posted, my friend. Tony the Tiger trading great. And now this one has the potential to go, right? This one hasn't reached the areas. You get the perfect pullback. Get in really, really late. And take it down. And then when you get to the termination condition, you give a lot of that back on the bounce. You see it, Tony? This is a good one. Great entries. Create manageable trades. Even with market flow, you never got a signal. So you're just trading areas. You're counting on that 28 area to hold. 36 area to hold. That's your areas of resistance inside of favorable large triggers. Up here at 36, 4 ticks higher. If you're in at 36, that's a big difference, isn't it? Instead of 5 ticks to the area likely to stop the market, it's 36 to 10, that's 26 ticks. Big difference. Getting in at the best of the best areas and then identifying where the market is likely to stop. Sam, from the lowest point of resistance to the highest point of resistance inside of favorable large triggers, right? Have you memorized that phrase yet? From the lowest point of resistance to the highest point of resistance inside of favorable large triggers, which means that your window of opportunity, that's it right there. Pretty cool, right? Lowest point of resistance inside of favorable large triggers, highest point of resistance. Guys, do I care about that fib? It's not inside of favorable large triggers, is it? I made some entry pictures for you guys yesterday. Let me see if I can find them. Today was more about termination conditions. Yesterday was more about entries. So, blue line is support. Sam, is it inside of favorable large triggers? Is the blue line, well, I guess it is down here, huh? But the market's already working its way down. When the pullback happens, it's not in it, is it? Still below it? Trade is already started. You're already going at this point. We identify the window of opportunity at the time of the pullback. Cool. So here's a good picture of it. From the top of the large to the bottom of the large, showing it clearly, then showing the window within the area. There's a good one, guys, that'll help you work those entries. Here's another one for entries, guys. Put these in your spreadsheet if you need help with entries. I literally take 50 to 60 pictures a day, I promise. If you get in that same habit, you'll be amazed at how quickly you begin to learn. You will be absolutely floored at your ability to read indicators. Well, and Sam, that's why we start with the basics, right? That's why we start with the basics. Making sure that initially you're 100% committed to odds favorable momentum, that you're 100% committed to no termination conditions, and that you're 100% committed to that area for entry inside of favorable large triggers. Because what happens, Sam, is when you focus on those basics first, it creates this ability for you to begin to recognize the nuances. And I gave this analogy the other day. I used to road race motorcycles. There was a time in my life where that's what I did. I endurance raced motorcycles. It was a lot of fun. But there was an instructor named Keith Code. And when he talked about motorcycle racing, he said, I want you to approach it like you have $10 worth of attention, okay? So guys, I want you to approach day trading as a new user. You have $10 worth of attention. $3 is going to be spent identifying high probability trend or odds favorable momentum in the beginning, right? $3 is going to be spent identifying termination conditions in the beginning. And $4 is going to be spent identifying your best of the best entry. Give me a Y in the room if that makes sense. You have $10 to work with. As a new user, you're spreading it out. But what happens as you go into your second week? Zeba, you only spend $1 recognizing odds favorable momentum, right? It becomes easy. You start getting good at termination conditions and you only spend $2. Now you can pick them out pretty quick, right? And let's say you spend $3. Entries get easier, but you're still working on it. So now I have $4 worth of attention to see nuance. No worries. Does that make sense? And then termination conditions become second nature. And then I can always find the entry. And guys, then I have $7 worth of attention to focus on chart reading. And it kind of works that way. So in the beginning, Sam, if you focus on the best of the best, put your attention where your attention is needed, right? With smalls above the large, with the large above the areas, getting wide, with areas of support inside of favorable large triggers. Begin to identify the nuances first. Tony, you said you went back to look at this one. I love it. Go back and look at everything, right? This was your first pick. You believe that you were looking at following rules. All right. So what are your rules, Tony? Tell me what your rules say. And then we can determine if you were. Because momentum, okay. So what has to happen on a momentum? You have to have a termination condition, right? Triggers below the area. You want a termination condition that looks like this, don't you? I believe that's the first rule. Then you have to have a full bar. Let's go back to 1051. And you shouldn't be trading into an area likely to stop the market. And I think that's where the challenge came. Because when you hit 79 and you reach support, Tony, do you see how the large triggers are above? You've already reached support. It's a termination condition. It's a great look if I don't have this fib. This fib pulls an awful lot of the giddy up out of it, especially when I'm coming from such a great termination condition. It's a great momentum look. This fib is enough to keep me out because that fib, more often than not, can create a bounce, especially when these large triggers are still up and above that area of resistance. Does that make sense? Especially when the gap back to them is that large. It just creates challenges. Your entry was perfect. That's why I said that I love the execution on it. And I just wanted to make sure that you saw that potential issue. Because I see a lot of those not work out as well as people had hoped. But here it is right here. Perfect termination condition, right? You get those bars. You haven't quite hit the fib. There's that pullback to the mid band. That's your momentum. Absolutely. So Alex, you know what? There's two ways I look at it. And guys, again, this is one of those nuances, right? If I am in a sustained up or downtrend, Alex, if my market And notice how I took ownership of it. Let me see if I can find a picture. If the market has been screaming down, if it's been breaking through areas, if everything says we're in this pretty established downtrend, my mid-band becomes the first potential bounce point, especially if I haven't reached a termination condition, or if I reach a termination condition even, it becomes my first bounce point. So after a sustained trend, I'm identifying that mid-band as a potential turning point, or at least a place to bounce. And then I compound it with the vacuum. If the market's been going up all day long, and I get a pullback to a mid-band on my 13.2, you couldn't pay me to trade into it. It doesn't fit my plan. Because when the market's been trending up all day long, your 21.3 is probably up all day long with odds favorable momentum, and it's really just a higher time frame trend trade. Does that make sense? Same way when this market is screaming in one direction, we can find that trend trade here. And Tony, do you see how the momentum trade made it right to the loss of momentum? And then that pullback took you to the area inside of favorable large triggers. First shot had to manage out. Second shot takes you the distance. Pretty cool, right? Alex, did that answer your question? Gary, price didn't quite make the key area there. It was close. It was close. All right, so let's do a lesson here. You're very welcome. And I like this one. And this is for everybody, not just Gary. But Gary presents a great picture here. So these fibs come to be when you open your software. The market, your software measures every swing in the market, every pivot, every up, every down. It creates Fibonacci projections, alternates, and it does this amazing scramble, just thousands upon thousands upon thousands of calculations. And I can't find the actual picture, but if you look at the chart with all those calculations, it looks like this. That's how many different lines are there. I mean, there's lines on top of lines on top of lines. So what happens, don't tell John I said he's brilliant, but my brilliant brother creates an algorithm that begins to sort and weigh the frequency, the distance, the, I don't know, whatever you want to say, whatever he does, it's smart. And it creates areas of resistance, very solid lines of resistance based on those calculations. And it creates very solid areas of support based on those calculations. All of these calculations result in these lines. Do you see it? So that's kind of how you get these really pretty lines. That's how you get Fibonacci support. That's how you get Fibonacci resistance. And guys, this is, believe me, the remedial version. This isn't the programmer's version. But what it does is it lets me identify the accumulation that has been sorted into one area. And it's an area, tick or two above, tick or two below. This divergence high represents the exact price where the buyers couldn't push any higher. It represents the exact price where momentum is lost. And it's that exact price that I become aware of. Give me a Y in the room if that makes sense. If I'm a tick or two off of a fib because of the way it's accumulated, I'm going to respect it. But I'm looking at this termination condition. I'm looking at that picture. This is a very specific price that if price reaches it, I'm going to see what's going on in the world. And if price doesn't reach it, and everything looks perfect, with odds favorable, with everything above, with the window of opportunity, then I'm probably going to take that opportunity. Go back and study it. That's the best advice I can give you. And I don't give trading advice, but I'll give educational advice. Go back and study it. How many times does it work? Run, enjoy it. Have a great afternoon, enjoy it. I'm up to 30 here. 50-50, 2 divergences. Gary's saying that's not my trade. 2 losses of momentum on an area with the potential to break. And then Alex, if you're in here, do you notice that there's an antenna bar with stranded buyers coming from that same area? A little more chart reading. Good read, Gary. So I just start noticing a little more and more. What else do we see? Support to resistance, to support, to resistance. No, a lot more chart reading than trading today. And some days are like that, guys. 90% of what we do is just waiting for an advantage, right? But we've seen quite a few of them today, haven't we? We've walked and talked through quite a few high probability scenarios, quite a few medium probability scenarios that we're able to manage. That's all we do. Ask yourself right now, do you want to make money or do you want to be busy? Because if you want to make money, it makes sense to wait for advantages, right? If you want to be busy, get a hobby. Play video games on the side, guys. I have a sketchbook next to me when I trade all day long. Or I'll play video blackjack or something like that. And honest to goodness, I will sit on my butt until I have odds favorable momentum. And then I'll start paying attention to the market unless it's trading right into resistance, in which case I'll sit on my hands again. The hardest part about day trading is doing nothing when your indicators tell you there's nothing to do. You only know when there's nothing to do. You only know that's what your indicators are telling you if you take the time to learn to read them. All right, so quick soapbox, guys. I have the microphone. You can't stop me. What's your path to becoming a successful trader? Post your trades in class. If you ask anybody that's successfully trading the markets through Nexgen, they'll tell you that they got where they wanted to be the absolute fastest when they put their fear on a shelf, started to be a little bit humble, put themselves out there and started posting trades in class. And they'll also tell you that, guys, there's a lot more to learn from a loser than there is a winner. There's a lot more to learn from taking the wrong trades on simulator than there is from seeing the right trades. Because when you make a mistake, when you choose to break a rule, you get to see the repercussions of how that giving away of the advantage reflects. The second thing is using that spreadsheet. Putting your trades in the spreadsheet. Guys, every time you pull the trigger, it goes in the spreadsheet. Every time you take a trade, it goes on the first page of that spreadsheet. This is what I did. This is how I felt. These are my notes. Everything that I do on Monday, I study Tuesday morning. Everything that I do on Tuesday, I study Wednesday morning along with Monday. Every time I take a picture of a rules-based trade, it goes into my personal trade setups. Every time I have an aha moment about management, when to hold longer, it goes into my management section. Guys, if you take the time to annotate your charts, if you take the time to write on a chart, this is what I see. This is what's going on my chart. This is how it ended. This is what happened. Guys, this is when you start to get good. Track your trades. Keep tabs of what works. Talk about what doesn't. Post it in the classroom, right? That's how you get to where you want to be. Learn the trigger looks for when it's okay to trade. Know what it looks like when your rules are met. Simulate. Don't waste your real money on lessons, guys. They even make you take a class before skydiving so you don't hit the ground, right? Don't jump without a parachute. Simulate. Post pictures in class until you're sure you have the correct rules. Not until you're sure that you're winning all the time. Post in class until you're sure that you can follow the rules. Don't practice the wrong trades. Don't create that muscle memory. Simplify your plan. What's it look like? Study it till it makes it easy. Use market replay, guys. You can get 2 days worth of trading every day with market replay. Go back, fix your mistakes. Take the trades that you missed. Racha, that long that you didn't take, market replay tonight. Make sure you don't miss it. Skip the trades that you shouldn't have taken. Take pictures of the correct trades and show them to me in class, guys. Give me a little job security here. And repeat this process every day until you always take the correct trades. Not until you win every trade, until you always take the correct trades. Because if you're always taking the correct trades and the correct trades have been proven to win more than they lose, aren't you guaranteeing yourself that you can win? And then maybe it's time to trade live money. And the cool thing is you don't even have to trade your live money. Use one of these accounts. Let these guys fund you. If you're really following rules, if you're really winning more than you're losing, for $100 a month, you can control $100,000 worth of money if you prove to them you can do it. Or you can put your own 100 grand up. That's up to you. Paul, 50-50, 2 divergence. You get in at the pivot stop out. And it looks like you get stopped out right at support. And then it went without you, huh? Was that crude or ES? That was this one, right? Happens sometimes, right? Area with the potential to break. So Paul, 2 divergences. Doesn't mean that it'll take it out by a tick. It means that it may take it out. Yeah, and it got you. And this is where you just kind of weigh it. This one says it has the potential to break. This one says it has the potential to hold, doesn't it? Couple ticks. It's hard, though. It's hard to watch that P&L go against you. That's just a bunch of chart reading, right? Weighing out the advantages from a good bottom. Yeah. We forget about it in the moment. Guys, that's all it is. You're going to take 2 steps forward, and then you're going to take a step back. And then you're going to take 2 steps forward, and you're going to take a step back. You're going to take 4 steps forward, and then you're going to take 2 steps back, and you're going to think that you forgot everything. But the reality is you're still light years ahead of where you were 30 days ago. Embrace the process. It's fun. I've been getting my butt kicked on the golf course lately. I started trying to do everything, and it's funny, and I think I was telling Paul yesterday, there's so many parallels for me between golfing and trading. At first, I didn't know what I was doing. I was just swinging the club, and I was having fun. I had no expectations. And then I started learning stuff, and I quit just swinging for fun, and I had to do something with everything, and I overthought stuff, and I looked like a fish out of water. And then I got a little bit better, and then I got a little bit worse, and a little bit better, and a little bit worse, and I'm going through that process every day. Yesterday, I went back to basics, and I did a little bit better. And I have to remember that lesson for the next one. Everything says down, and you go long. Everything says down, and you go long. Everything says down, and you go long. Without rules on the chart, Elvis, it looks like you're just fighting trend and momentum coming from a good top, and there's zero indication that I can see that that market's just going to reverse for you. I'm glad that it did. Nice trade. Elvis, do me a favor. When you go counter trend like that, write your rules on the chart. Let's keep this an educational room. Let's not turn it into a show-off room. That's what the traders chat's for. So if you're going to fight all the momentum, if you're going to fight all the direction, if you're going to put all your faith in a blue line, write your rules. Let us know how you did it, because then it becomes an educational opportunity for everybody in this room, and not just a, hey, look at the money that I'm making trade. Please and thank you very much. We've reached a divergence high, haven't we? Absolutely none of the trigger lines have broken through. Can we identify this as a termination condition, as an area with the potential to stop the market? We also have divergence right from a 1-to-1. We've seen this on a couple pictures today. Divergence right from an area at an area that hasn't broken. Let's see what the result is. Let's see if there's a pattern in place that can give us an advantage. And guys, that wasn't just for Elvis. If you're gonna take trades, trades are amazing, and I am always thrilled to death with your successes. But remember that this is the education room. This isn't the traders chat room. So give me a little help. Give me some educational value on your charts when you post them. Let me know what you were seeing. Let me know what you were thinking. Because the reality is each and every one of you are pretty brilliant. And I've got something to learn just as much as anyone else does. And you may see something differently than I do. So I appreciate that. I appreciate you pointing out the reasons that you're willing to take a trade, the reasons that you're willing to get in and out of the market, because it makes everybody in the room a better trader. But in the beginning, keep it simple. 3 simple rules on 2 charts, guys. In the beginning, make sure that you have a foundational understanding of what you're looking at. In the beginning, what other pictures do I have? Make sure that you're writing why you do what you do. Make sure that you're telling me what you saw, why you saw it. Guys, this looks exactly like what's happened so many times today. If you tell me what you see and what you think, we can talk about if you're seeing things correctly. We can talk about if you're following your rules. Remember that posting in class, those annotated charts, is key to your success. Remember that you're not in control. We're doing what the large people, what the big crowds say. We're following their momentum. We're following their clear path. And then we're just letting that small group push us back to our perfect entries. Lot to remember, right? Termination conditions come from emotional spots. That area where the buyers couldn't go any higher, where they lost momentum. Isn't that unbelievable? Divergence from the area, 0 triggers through the area, and look at it push lower. Your small chart told you it was likely to happen, didn't it? Second lower divergence. Do you have the repetitions to begin to recognize these looks? If you don't, that's okay. We'll talk about them every day. Guys, is there anything else I can cover for you before we call it a day? I feel like this was a good one. A lot of time spent on entries, a lot of time spent on termination conditions, a lot of information to process in the beginning. I know it. Stick with it. Your clarity is going to increase. Keep coming back. Awesome. It will, D. Keep coming back. And remember, guys, simulator is amazing, right? Simulator gives you the opportunity to practice before you put your real money at risk. What an amazing thing to do. Guys, have an awesome afternoon. I'll see you tomorrow. Elvis, respectfully, give me some rules on that chart. Let me know what you see. I'll talk about every chart that you post if you promise to put rules on it. Guys, take care. I'm going to go fire up mine, look for high probability trend trade setups, see if I can make a little money this afternoon too. You guys take care. I'll see you in the morning.